All right, ladies and gentlemen, I hope you had a wonderful day. We had another wild day in the stock market, and it's only going to get crazier as we have data, a lot of things around the world, and now the hurricane. So we need to talk about it. I want to explain to you how the hurricane is going to impact the stock market and maybe even give you a little tip here. This was from the Chad. If you are through the hurricane and you are going through it, you're in Florida. Hopefully you have already evacuated by now, but don't forget, set your voicemail to where you are going so that way people can reach you, or if you have family that is staying, tell them to do that if they end up going anywhere. So if you call them, you'll know where they're at. So hopefully it doesn't, the 100-year Tampa Bay protection. I hope it actually holds true. So we will see, but we got to talk about the market here because a lot of people have different ideas as far as how this is going to play out on the market. So the stock market has experienced a lot of hurricanes in the past, some back to back, and some of them have been devastating. There was even Hurricane Sandy. That was a while ago, I think like 2017, and that even led to the New York Stock Exchange being shut down. So the geography and where the hurricane hits, that has an economic impact. So that's going to be at play here. But the one thing I will tell you is that the effect of the hurricane, it is already in play leading into this. You have watched people get prepared. Florida has been very prepared. You have been seeing people evacuate. The power generator stocks, the home improvement stocks like Home Depot, even roofing stocks, man, it's crazy. Like Beacon, we saw this one on stream today. A lot of these names have already moved up. So even the big box retailers like Costco, they have all moved up. The names that have gone down have been the insurance companies. So if you go and look at any of that, even I think it was Aflac the other day, they had a big drop, and then here's even Chubbs. People are getting worried as far as the impact. But if you are looking to be like, okay, how can you play this event? I mean, I think you should be more focused on evacuating if you're in that area, and just honestly, the stock market usually underestimates the effects, and sometimes there has been bigger effects on the market, but usually you get this impact where a lot of these names make these move in advance, and then after the hurricane, things kind of go back to normal again. It does depend on the damage and what happens. There is always going to be a lingering uncertainty of some people who benefit and some people who lose in terms of economic effect. And even historically, this is a little fun fact. If you go look at all of the hurricanes in the past and go watch some of the insurance companies, you will see how they have moved, and they drop as you lead into the hurricane, but by the next time, within like 3 months, when they have their quarterly reports, they usually rally as the losses end up coming in less than what they were forecasted. So again, uncertainty usually gets the best of us. Easy to be underwhelmed and not really price things in because sometimes things don't happen. So that's one thing I want you to understand. So if you are going to be looking for that, I don't think you're going to get a huge effect tomorrow, but the real impact, and especially with the economic situation we have been dealing with, the real impact you want to be looking for, it is going to be down the road, both good and bad. And the fact of the matter is, major hurricanes, they can impact the jobs data and reporting. So we all care about the non-farm payrolls and even the rate cuts and all that. We're about to get the Fed minutes tomorrow. This could have an impact on people filing for jobless claims or not, the unemployment, even some of the benefits there. So that could lead to some problems. And then the other problem is flooding and damage and pretty much the infrastructure getting messed up. That could hurt supply chains. But then again, you just saw the ports close and reopen for a little bit. We could deal with a lot, especially after COVID, but the long run effects, sadly, after these hurricanes, they're actually positive. And I say talk to Bill Dudley because he's the one who said this back in the day, because if you go and look at all of the rebuilding that occurs and how it leads to jobs and other creation, in the long run, it usually has a positive effect on the economy. So fact of the matter is, you need to prepare for the hurricane in real life if you are around there. As far as the market, I think it's going to set up a lot of traps, but what you need to be looking for is simply uncertainty. That is where the market is uncertain into it. That's why some of these names all make that advance and some names go down. And depending on the scope of the damage and who gets affected and not, that is going to determine the scope. So there has been instances where volatility has increased, but you do have to pay attention to this. And will it be the whole entire stock market volatility? Probably not, because some people will benefit, some people will lose, and then the follow-up within 3 months. It's usually, these hurricanes, it's not just the 1 day, 1 month thing. It does take some time. It could take even a quarter. The follow-up earnings are key. So I hope that helps you out. I hope you are all safe. But now, wait, I got to go. Wait, I forgot to even tell you guys. We got to talk about the market. We got to go over a lot of different things. It was pretty wild today. The China reopening was a dud. The tech stocks and chips went crazy. And we got to talk about bonds and all of that. So I got the plays, the keys. I hope you are safe too, man. But give me that like. Show some love, man. Hopefully we see you on stream. YouTube.com/The Stock Market. We're live Monday through Friday, 30 minutes before open, baby. Run it.
Working to the couch, it's a 20 less. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
Right off the bat, I really hope that hurricane analysis helps you out. One, understand it for the future, but also just so you don't get caught up making any bad plays tomorrow, and then down the line, depending on the effects, if you see something get created, I think you're more likely to get a good hurricane play down the road as you find out what happens to the economy, and then look for the macro, baby. But the rate debate, that was at the center of the conversation, not only today, but this whole entire week. So if you don't know what I'm talking about, every single morning you have been waking up to people saying hawkish repricing of the Fed, meaning we are pricing in less rate cuts on the market. That's why it's quote unquote hawkish. However, you just got your rate cuts and people are talking about soft landing or no landing. That is why you are watching the yields go higher. TLT is going lower, but you still got your rate cut. This is that whole soft landing, no landing, and this impact on the bonds. So this is what everybody keeps talking about. It's had a big effect. I think even before and after the CPI, this is what is going to keep going on because this has been heating up ever since the jobs report last Friday. So that was the first part of the day. The other part, China, they really added the auxiliary, the side to everything because they moved a lot. It ended up China Shanghai Composite gapped up 10%. By the end of the day, it sold off to 5%. They came back from Golden Week. They did not announce any new stimulus. They reiterated what they're going to do, gave their pledges, but it wasn't anything new, and the market was really disappointed, and that's why the Shanghai Composite went up and sold off. Still was green, but then the Hang Seng, that was open during the Golden Week, and that was rallying. That dropped 9%. Apparently, it's worst day since '08. So that was wild. And then you had the chips with the NVIDIA event. There was a lot of crazy chip moves today, and that helped things out. So tech stocks got a rip. It just seemed like we sold off some of the China hype, put it back into tech, and then once again, you saw the market do its thing. So that's going to lead into the next key because you have the Fed minutes tomorrow, but sadly, it should not be too big of a deal because I just think the market is trying to work this volatility. Like I've been showing you guys here, just go pull out like a 7-10 day chart of the SPY, even though we kind of had this little melt up here, getting back to the jobs report, go look at the VIX. Volatility is climbing while the market is barely advancing. So I think the minutes, it might move some things around. Maybe we advance a little bit, decline a little bit, barely move, and volatility goes up. But the real thing that I would be looking for will be the CPI on Thursday. So besides that, the only thing you got to watch for the minutes tomorrow is that it will be our first look into the Fed following the first 50 basis point cut. So that has a lot of implications. I don't think it'll change the narrative too much. The only way it does is if we find out they were talking very bearish about the employment situation and why they cut rates in the meeting. Otherwise, the minutes should read dovish because this was the meeting where they decided to do an pretty big rate cut, even though all the jobs numbers got revised up. And the reason why we worry, oh no, don't get me started, but that's the second key. Watch out for it tomorrow, but I think it's just going to be working volatility until we get the CPI the next morning. And then finally, if I could give you a good tip to look at, because it's going to start here by the end of the week, earnings. And I really think this may be a bigger deal than what we are talking about as of late, because people have been asking about which data to be looking at and the jobs and then this and then the election and saying it's manipulated. Do you trust it? Well, fact of the matter is, the least manipulated out of the bunch of data that you could use to gauge the economy. Don't forget, company earnings are a good gauge. One, it does tell you how they performed in the last 3 months, so it is somewhat lagging, but also their guidance, that gives you a little bit of insight there. So if we do get any big earnings moves, if you're wondering, employment, the Fed, election, that could give us a sign too, and maybe other repricing occurs large if we see large earnings move. So watch out for that. Those are the main keys. I think it should be fairly excited tomorrow, but Thursday is going to be the main event, but we're going to have to see how everything plays out, hurricane and all of that, and be safe. But now, let us get into the plays. So, right off the bat, I got a couple of different plays. In the first one, I did make a play on this, so we'll go over that one in a little bit, but TSM. So they have earnings coming up here in about 10 days. They could benefit off of the China stuff or maybe get hurt by it. And then the NVIDIA summit, there was other things that were coming up there. Maybe there's another announcement. I think they have the best chance to gain or lose from all three of these events coming up. So maybe volatility just increases and it makes some good plays, but I like TSM both ways. I'm not just saying one way. Fact of the matter is, they got a lot of things happening, and I don't think people have been talking about them. So like I'm saying, with them and how they lead into earnings and China and NVIDIA, this might be a good one. And remember, we did get a pretty good TSM one before, so they may start this cycle with all of these earnings. So watch out for that. That is play number one. Then play number two, oil round two. So it's not here yet. Chill. Remember, we got oil like a month ago, that cheap global hedge. It's been going up. It had a bad day today due to China. So think about why the demand and stimulus and people cooling down, that had the effect. There wasn't any extreme war escalation. And even though there was the hurricane, it seemed like a lot of places were already prepared. It's not like there was a shortage of fuel. It was a shortage of getting fuel to the right places. That's more of a logistical thing. So we'll see how it plays out. Again, China will have that impact. But what I'm saying here is that there is a scenario where I would top tick oil, and I want you to be aware of it. We explained this today on stream because there was a headline that came out, and you saw this even last week, but there was a report that Israel is considering striking Iranian oil fields. Remember when Biden said that, and that's where we got this drop here. Oil popped and did come back down, but that kept oil off of the bottom today, and people were asking what it is. So even the thought of it gets us moving, but what I want you to understand is very simple. If there was, in fact, an attack on Iranian oil supply, I would go and buy oil right away. In my opinion, I think that any sort of Iranian conflict, them stepping into it in a highly escalatory manner, that is going to lead to oil booming up in the next 3 months. Why do I say that? This is what we were going over today on stream. If you were there live, you got to see it all. I got two of these, but this is all of the, since 1939, the geopolitical events, and then you can see how government bonds, corporate bonds, large cap equities, and then gold and oil have performed, but it's very rare that Iran gets directly involved, and if they do in a big way, every time it has had a huge impact in that quarter for oil. So you could even go back 73, 79 were different situations, but it was, again, related to Iran there. So if they step in, remember the Strait of Hormuz and all of that, that is what people are worried about. So keep your eyes out for that. That is play number two, but hopefully you understand the theory. I'm still holding my other little micro oil play, but I'm looking out. If that did in fact happen, you should be prepared and know what to do or not to do if there's not a headline that's big. So that's play number two. Watch out for that. And then finally, Weight Watchers. So I don't know if I'm going to play this one, but they announced a low-cost Ozempic knockoff. Yes, a knockoff. It's like a Wegovy substitute, and it's weird because this was in the morning, and they had a very small reaction, and then after hours, it just went crazy. So we'll see how it plays out. Again, even like Hims and other people have done this, they got a boost off of it. Weight Watchers is like a penny stock. That's why maybe people go crazy. So we'll see. I thought I'd throw that in there. Otherwise, go watch yesterday's watch list, that theory on bonds. I would make sure you are aware of it. But those are the main plays. As far as everything else, the plays that I made today, I did TSM both ways like I talked about. I grabbed 20 of the 260 contracts. These are further out of the money, but I'm going for cheap premium, make them free, take advantage of the volatility with all of these events. I grabbed those 20 contracts at 11 cents, and then I grabbed 10 of the 180 puts at 15 cents a pop. So if these do go up, I'm most likely going to make them free, but like I told you guys above there, with what's going on, I think TSM, I'm surprised it's not being talked about a little bit more. So that's the first play I made today, and then the only other thing that I did, there was GE. I grabbed in November, so it has a little bit of time, 270 call. I grabbed 3 of them for 6 cents a pop, and I was looking for the snake. They had a huge random 1.8% pop intraday, and usually that was news and there wasn't anything, so got these at like 6 cents while the whole chain was going crazy, but then I think they went to like 2 or 3, so 18 bucks. Probably going to be a worthless play unless it gets lucky, and then we go from there. But other than that, I have no other plays. I think tomorrow we'll keep our eyes out for the minutes, watch the bonds and the rate debate, and then we'll see what China adds to it. But other than that, be safe in the hurricane and get ready for the CPI. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, nobody remembers takers. Relationships instead of accomplishments. Understand why you work so hard, baby. But stay in the game. Get that long term. Drink that water. Stay hydrated, healthy. All that good stuff. I'll see you in the morning. And Harna.